and then walk you through. I know you could easily go to irs.gov for this, but sometimes you may pull it and still don't understand. And so when I'm done with this, I'm going to check if you have any questions. But this is the K1 that you will get if you are part of a syndication or if you're part of a partnership, a real partnership. And for the syndication, I'm going to caution you. Be careful with syndication that makes you a limited liability partner. Limited meaning that you cannot make any decisions as to what happens to the property. And so you want to be in a partnership where at least you have a say-so. So if it has this button here that says limited partner or other LLC member, you do not want this. The reason is when there are losses, there is a cap, or you may not even be able to deduct it at all. So you don't want that, because most property rentals, because of depreciation, always end up in a negative on the paper. And if you are a limited partner, you may not be able to write it off. I can't say definitively because everybody's tax situation is different. Depending on your other sources of income, certain things may work for somebody else, but may not work for you. But if I'm your accountant, I'll tell you, do not do anything that says you are a limited partner. You want a domestic partner here or general partner. You do not want anything that says limited partner. Make sure you have an attorney who reads through all these syndication papers that you sign before you go ahead and join anything. And if you join it, notice over here, it says net rental real estate income, meaning that you're going to get the net amount, not the gross. It's going to show you, say the rental income was 100,000, the expenses that I showed you already, all of it comes to say 50,000. So over here, it's going to show you the 50,000. Ordinary business income is just regular businesses. So if you have a K1 from a partnership that has rental property, it will split it apart from regular income if they do other activities other than rental. And then, of course, they will have other rental, and then they have the guarantee payment and all that here. All these tax forms, I did cover it in my small business bootcamp. It's different, but this one is just for real estate. I wanted to tell you how the rental income will be showing up here. And then down here, it's going to show your percentage when you started the year and what percentage you still have. So you want to be able to read these things so that you don't sign something that you are not comfortable with. Now, down here is talking about a capital account. So how much you invested from the beginning, and then whatever contribution that you put in addition to what you started with, and then the current net income or losses. Keep in mind, if the partnership ends up being a loss, it reduces your capital stock in the business, okay? Your capital account goes down every time you have a loss. The reason is they allow you to write that off on your 1040, so it reduces your basis, meaning your cost basis that is in a partnership. So when it's dissolved or is closed, that will go against whatever proceeds that you all sell the property for. So this is an area you want to pay attention to. Any increase or decrease. So they will put the explanation here, and then withdrawals. All those distributions that you receive from the partnership, it reduces your capital stock in the partnership. So this area here is an area you also want to pay attention to when you get the K1. If you don't know how to read it, have your accountant help you understand it, and that tells you whatever basis you have left in there. These are the areas I want you to pay attention to. So please let me know you understand what I'm saying on this K1. And you have access to this video for a year, so you can go back and always refresh your memory on this. When you get